Hello traders and welcome back to the channel. My name is Alex and this is Explain the Charts, where we break down the news and the price action to give you a clear, actionable perspective on the markets. Today is October 28th, 2025, and we are doing an in-depth analysis of NZDUSD, also known as the Kiwi. There is a lot of exciting news driving the price right now, so we'll start with the fundamentals and then dive deep into the daily, hourly, and 15-minute charts to see what they're telling us. First, let's talk about the headlines because the big news is the easing of trade tensions between the US and China. We've just had reports of a framework agreement being reached to avert significant new tariffs, which has injected a wave of optimism into the market. This is fundamentally bullish for the New Zealand dollar. The Kiwi is often considered a China proxy currency because New Zealand's economy is heavily reliant on trade with China. When China's economic outlook improves, so does the demand for New Zealand's exports, which strengthens the NZD. All eyes are now on the upcoming meeting between the US and Chinese presidents later this week on Thursday, as a positive outcome could fuel this rally further. However, this bullish news is fighting against some strong headwinds from central banks. On one hand, the U.S. Federal Reserve is widely expected to cut its interest rate by 25 basis points this month. A rate cut typically weakens a currency, so a more dovish Fed should weigh on the U.S. dollar and provide a tailwind for NZDUSD. On the other hand, the Reserve Bank of New Zealand is even more dovish. They've already cut rates aggressively and markets are pricing in another cut in November. This is because while New Zealand's headline inflation recently hit 3%, the upper end of the RBNZ's target, underlying measures are softening, giving the central bank reason to continue its easing cycle to support the economy. This creates a fascinating tug-of-war, positive geopolitical news, and a weaker USD versus a fundamentally dovish RBNZ policy. The winner of this battle will likely determine the pair's next major direction. Now, let's bring up the daily chart and see how this story is playing out in the price action. Looking at the bigger picture, the dominant trend for NZDUSD has been unequivocally bearish for over a year. We can clearly see a series of lower highs and lower lows ever since the pair topped out above the 0.6300 level back in September of last year. This persistent selling pressure has pushed the price down through several key psychological levels, including the important 0.6000 mark. For long-term trend followers, the strategy has been to sell into any strength, and this overarching downtrend remains the most powerful technical feature of this chart. Let's zoom in on the more recent action, focusing on the past couple of months. Here we can see the sharp decline from September's highs, which accelerated in early October. However, the selling pressure stalled out and found a significant area of support between 0.5680 and 0.5720. Price tested this zone on October 7th and then again around October 14th, holding firm both times. Notice the series of small, indecisive candles, or dojis, in mid-October that one of the articles pointed out. This signaled that sellers were losing momentum and a potential bottom was forming. This support zone is now the critical line in the sand for the bears. The recent bullish trade news has triggered a strong bounce from this exact area. Yesterday's candle was strong, closing well above the 0.5750 minor resistance level and bringing the price to where it is now, around 0.5770. The immediate challenge for bulls is to overcome the psychological resistance at 0.5800. If they can succeed, the next major target would be the highs from early October near 0.5840. To get a better look at this recent rally, let's switch to the 1-hour chart. Here we can see the price action since Sunday night, and the impact of the trade news is crystal clear. We saw a sharp impulse move upwards, breaking out of the previous tight range. Since that initial spike, the price has been forming a constructive pattern of higher lows, indicating that buyers are stepping in on any minor dips. The pair is currently consolidating in a narrow range right below the 0.5780 level. This consolidation is healthy and suggests the market is building energy for its next move. A breakout above this range would be a strong short-term bullish signal, likely leading to a quick test of that 0.5800 level we identified on the daily chart. Drilling down even further to the 15-minute chart gives us an intraday perspective. We can see the tight consolidation that has been forming over the last several hours. Intraday support appears to be forming around 0.5760. For short-term traders, this range is key. A decisive break above the session highs around 0.5778 could attract momentum buyers. Conversely, a failure to hold the 0.5760 support would be the first sign of weakness and could indicate that this news-driven rally is fading, potentially leading to a retest of the 0.5750 breakout level. Alright, let's pull back to the daily chart and summarize everything. We have a classic conflict between a strong, long-term bearish trend and a powerful, short-term bullish catalyst. The fundamental picture is mixed, with positive trade news battling dovish central bank policies. Let's recap the key price levels to watch. Critical support is the zone from 0.5680 to 0.5720. As long as the price stays above this, the bulls have a fighting chance. Minor support now sits around 0.5750. To the upside, immediate resistance is at the 0.5800 psychological barrier, with the next significant hurdle at the 0.5840 area. So, what are the potential scenarios? The bullish scenario, which I'd give a 60% probability in the immediate short term, is that optimism continues to build ahead of the US-China summit. In this case, we would look for a breakout above the current consolidation to test 0.5800 and then 0.5840. A daily close above 0.5840 would be a significant victory for the bulls and would begin to challenge the larger downtrend. The bearish scenario, with a 40% probability, would be triggered if the trade talks show signs of faltering or if the market's focus shifts back to the RBNZ's dovishness. A breakback below 0.5750 would be the first warning. A move below the 0.5720 support level would put the bears firmly back in control, opening the door for a retest of the major support at 0.5680 and potentially new lows. The most important thing to watch for this week is any news related to the US-China meeting on Thursday, as that will likely be the primary driver of volatility and direction. Finally, please remember that this is not financial advice. This analysis is for educational purposes only, and you should always conduct your own research before making any trading decisions. Trading Forex involves a high level of risk and is not suitable for all investors. Thanks for watching Explain the Charts, and we'll see you in the next video.